Bum, 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 bum. Market vitals, the levels you need to triage the market. Matt, I'm winded.
That's because you just did 100 push-ups.
100. I had a college roommate that used to do that. You'd walk in he'd hear you opening the door and he'd drop down and be going 99, 100. Oh,
at least he could do two.
Exactly. How much of life is rhythm and timing, Matt? You know, and as white people, we really we're challenged with rhythm. And
I was watching Ricky Gervais's new stand-up today on Netflix this morning.
Everybody's in an outrage because
it was so great. It was so great. His one joke was, he's like, LBGTQ, 5% of the population, trans, 3%, 2% of the. He's throwing out the numbers, right? And he goes, and I'm a white male, millionaire. 1% of the population. I'm not complaining. Which that was like perfect.
Ricky. Matt, I don't know if you know this or not. Well, of course you know this. The Shrimp Mojo, this is the Rub Me Shrimp Mojo t-shirt available at Redbubble. Just search for Manja TV. But what I didn't know is that the Shrimp Mojo is Rudy approved. I had no idea Rudy is a shellfish connoisseur.
Rudy loves. He loves. Big fan.
He's a big fan of the shrimp.
I think he had a Baker's half dozen.
Look at the eyes. I mean, he might be one thing, old and deaf, but he certainly can see the Shrimp Mojo still. Matt, we do it every day. Breaking. You're right, Matt. This was January 20th of 2022. So the World Economic Forum now going every 5 months to get their narrative out, and the Great Narrative Conference. We bring this up a lot because there's good news out there that the elites trust each other more and more until they don't.
Did you see the opening speech by the Dr. Evil Klaus yesterday? He was so desperate, man. I loved watching. He was like, "We are here. We are changing the world. You people right here." But none of the woke, pretty elites are there, which has got to be pissing them off. Angela Jolie, nobody's there.
Well,
what's going on? They're eating each other.
Here we go, Matt. Amazing Alibaba. That's a Chinese group, is it not?
Oh yeah, it's Chinese. It's the
but
Chinese.
The president
the Chinese Amazon.
J. Michael Evans is now president, and he boasts at the World Economic Forum about the development of an individual carbon footprint tracker to monitor what you buy, what you eat, where and how you travel. I'm not making this up. Look at this. It's not photoshopped. It just blows me away, the irony of these cocksuckers. I'm going to call it what they are, because I think they're going to have an on-off switch on their carbon footprint with their private jets. I don't know. Maybe we could get somebody from Bombardier or.
I wonder if Greta flew in. Is she there for the?
Or Lear jets with the new carbon footprint on-off switch. I don't know. I just don't trust them, Matt. They might, back to hold on a second. Back to this. They might trust each other more and more. The bad news is that the majority of the rest of us, not so much.
Right there, Greta should be there. Greta should be there, like throwing a tantrum about all the planes flying in. Where is she right now? Why isn't she there going? Ah! Ah!
How dare you?
How dare you?
How dare you? All right, man.
Oh, wait, I forgot. She's locked down in Belgium from monkeypox. They've locked them down there again.
No, Greta. Lee with the info. Lee hot on the ground. No, Greta.
Well, we sent Lee to Davos for us.
It's Davos, isn't it? Matt Davos at the World Economic Forum. Matt Davos at the ITI convention. Matt, speaking of mushrooms, how Trudeau lasts the year I don't know, but let's talk about price discovery. And this is, when I saw this yesterday, I just couldn't believe it. I mean, I thought the Japanese were out of control with their balance sheet versus their GDP. But look at this chart. The Bank of Canada's balance sheet versus nominal GDP year over year is at 456%. I mean, everybody else is ridiculous at around 50 to 70% if you're not doing it right. I don't know what else to think of this other than there's a bad moon horizon. You know, I'm in fact, I think they should change the national anthem to "Uh-oh, Canada." What do you think?
I just saw somebody follow me a Toronto Maple Leafs, website, Twitter thing, and I responded to him. You guys, the Maple Leaf, he was talking about the Maple Leafs need some toughness because they got their asses kicked by Toronto or by Tampa Bay in that series, and they were definitely, should have given a better effort. And so his comment was they got to bring up some toughness. And I'm like, it starts from the top. When you have Justin Trudeau as the leader of your freaking country,
snowboarder,
yeah, knuckle dragger. Like, what do you expect? What do you expect?
Knuckle dragger. I have never heard that before. A knuckle dragger and a slope ruiner. Ruin the slope for the rest of us.
Just cut it all up for the rest of us.
All right, man. Let's
look. It's like the guy that does an 8 ball a day. He comes in with that last line and just inhales the whole thing.
Thanks.
The whole pile.
Party ruiner.
Right.
Matt, 456%. I mean, maybe they can thread the needle on that kind of monetary.
Yes, and inflation is transitory. Yes.
Right. And maybe not. But I thought right away when I saw it, one thing that's going to suffer has got to be their currency.
Yeah.
And so
and it has been suffering, Bob.
I mean, rubles or Canadian dollars at some point, what a cross that's going to be.
Yeah.
Let's look at the Canadian dollar outright, just Canada. Canada versus the US dollar.
Yeah. Again, we've got, after this Calgary Battle of Alberta series is over, we're only going to have one Canadian team left in the, Stanley Cup with the final 4 teams. So I could pretty much think that this is going to continue. We're heading to value, which is, we're in the value zone. The lower end is 73 cents. That goes, we're going to test, the COVID low, right? We're going to test the COVID low. It's such a great theme. I love the COVID low theme because it is working out. It is flat out working out. So this is going to come here and it's going to fall. Absolutely, Bob. There's nothing.
Let's talk, because the best trade I ever made in my life was buying property in Canada at about 62 cents and then having the currency go par.
Mm-hmm. I don't know when that was, but that was
a while ago.
That had to be in 1980s.
I'm not that old. Come on.
That's when it was.
No, it was 2000s right there.
All right, 2002.
2002.
Well, we're going to go back and test those again. That was a good time to go to Windsor to go to Jason's and get your Bradors in 2002.
It was a great time to go skiing. You could get.
I do remember that actually. I had just moved out here in 2000. I remember 2002 when Detroit played Vancouver. I went up there and I went up there for the Stanley Cup Series. Detroit lost the first 2 to Vancouver. Notice I have the hat on.
Hey, how about this? A blast from the past in the room.
Blast from the past. Warren joining us.
What's up, Warren?
So yeah, this doesn't look good. It's a dying currency, like all of them. I mean, all of them know they're broke. It's the same. It's the same theme. Like it gets old talking about it, but every currency is on its way out because they're all complete. Their sovereign nations are completely bankrupt. Right? They're completely can't pay for their bills already. Like, what are you going to do? What are you going to do?
Well, I mean, the chart behind me there, and leave the Canada up. Canada. I got to work on the phrasing for the national anthem. Canada.
Oh, Justin Trudeau, you are
a hole. Expand the balance sheet. and never pay for it, or pay for it in much
Do
cheaper.
not allow drilling, but fly your corporate jets to
the party.
Dr. Evil and Davos.
Davios. All right, listen. All kidding aside, I mean, this is one that I for sure will have on my board. And you know, my brother was telling. Lee said, "All the glass in my house just broke. Keep your day job." All right, listen, it's a tough one. I'm not John Corneliuson, the Blackhawks singer of the national anthem of both of them. But you know, speaking of Canada, Matt, and we've covered that. Let me jump to another one, and this is an interesting one too because there's some fear porn here, which media loves. World has just 10 weeks worth of wheat left after Ukraine. Hey, listen to me. The world always has around 10 weeks of wheat left. Because wheat gets harvested pretty much every week of every month of the year, someplace on the planet. I mean, this is incredible fear. Like, that's what we do. Fear and shame, rinse and repeat. But I will say this. Let me bring this one up because as a trader of grains, these are things that are also important. And speaking of old Canada, Garrett here, Ag Trader Talk, sharing this yesterday. There's 2 million acres of corn unplanted in North Dakota and 6 million acres of beans. Final planting date for corn is Wednesday, definitely Wednesday. Matt, because there's these things called germination times and time to pollinate, and a whole trajectory, Matt. A to B, we talked about it yesterday, the dynamics of flow. To get to A to B, you got to get corn in the ground by Wednesday. Now, if North Dakota is 2 million acres only, you know, in beans or in corn, the Canadian prairies are further north. They got to be further behind. So there is a giant speculative trade here going on.
So it's interesting. Over the last 2 days, I've seen so many like warnings from Zero Hedge. I was like, okay, this is to me, it was almost like a sell signal, honestly. When I start seeing all this, you know, it's
I agree with you. It's like the
somebody needs to sell, and so I'm not involved. And then I bring up the chart today. I'm like, yeah, this is what's happening. We're down 2.5% today. It's like, okay, all the fear and loathing is not really, as you said, it's not true. You know, there aren't food lines really, except in Sri Lanka and some other places, which have been mismanaged by our puppet governments that we have put in place. So what would you expect? But I don't know, corn, it's we've been talking about it for a while. It's been kind of just, you know, it's the unlimited spool. It's still bullish, but if you're trading right now, I think you got to lean to the short side.
I agree with you. I mean, that looks like it really wants to come back and test that high end of value.
The high end of value is down here at 679. It's a full dollar lower. And, you know, let's take a look.
There's nothing bullish about that chart. It's bracketed.
Not right now. Not right now.
Exactly. It's not making new highs. It's bracketed. There's all this news that they're not going to get near enough corn in the ground yet. What's the price telling you?
Yeah. And here, you know, here's a 20-day chart. We're making a new month lows today. So yeah, why would you, this should be sell all rallies is what you should be. And every time it bounced right here to the point of control, it was getting hammered. I mean, look at that. It gave you 1, 2, 3, 4, you know, this has done it like 4 times. So somebody's got to sell here, and that's what they've been doing. So don't believe the hype. Don't believe the hype is all I have to say. When you see the hype in the press, they are the last to know, right? When you see that article, you're like, all right. Yeah. Like you start telling me, you start showing me those articles about Tesla, I'll buy it. And nobody's writing those articles. They're all bullish still, right? They're all bullish. So you got to fade the masses. It's always this way. It's always this way. The timing is impeccable. You have to fade the masses.
All right, let's go to wheat because that was everybody's starving. Not only that, Matt, most of us
and wheat's down 3% today, Bob. Just a little 3.
Right. Most of us could stand a gluten-free diet. Right. As far as I've uncovered in my health discovery and trying to lose weight. But again, this one, why wouldn't it go at least test the point of control on this fractal? I mean, it seems like you want to be selling rallies here also.
Yeah, I mean, to me, it looks like it wants to come down to this. Again, this isn't hitting new lows. It hit a new high here recently, but I think it's going to go lower. So, yeah, look for that to at least settle into 11, which is another 50 cents lower. That does look like that's going to happen to me, Bob.
All right. And last but not least, let's look at the soya beans.
Soybeans are actually green today. They're up 4 cents, but they sold off a little earlier. And they're, but again, you look at these 1 month charts, they're not really bullish. They're looking like they're struggling just to get to that top to test again. That, from here, this is the last month. We pull back a little bit. And again, you see, it's just, we're building we've got a profile that's basically building some type of move one way or the other. We're either going to explode higher, we're going to explode lower. If you break 1570, you're going to go down $2. If you break 1770, you're going to go up $2. That's how I see it.
Right on. Fast, quick, beautiful.
That's what I say.
That's what I say. All right, what else do we got? We were talking Snapchat, Matt. Apparently, nobody wants to advertise on Snapchat to the.
I mean, it's the same thing. It's such a pile of turd. This thing, it's like you said, you're like, oh, who's on Snapchat? I said, well, my kids, all their generation is on Snapchat, but even they don't use it a lot. So it's another picture posting app. How much time do you have in your day to post to Instagram, Facebook, Snapchat? Something gets cut, right? Something gets cut. One of them wins out. You're not posting to all of them unless you're some, influencer in the wild, and who gives a shit about those people because they're wasting your time, So I don't know. This thing was 778 when COVID started, so it still could get cut in half. The lower end of values.
Matt, say that one more time.
It still could get cut in half, and it will. Matter of fact, because if it's trading down to 1290s today, which it did last night. I mean, you're in a point of control. It might get a bounce, but it's just going to continue to go lower, and that lower end of value is down here in the 3s. So it could even cut in half of the low from COVID.
Halved again.
I mean, it reminds me of Groupon from back in the day in the first internet bubble. I mean, amazing that this stock is still alive, right? I just want to bring up a long-term chart just to look at this. Like, if you don't think this type of stock, which is basically, and this thing went public, private, it's done all that, but they, brought it public again in 2011. This is like a perfect example of, they bring this stuff, and we've talked about this, they bring it back and they just bleed it out over the years. All the bag holders holding this thing, it's been as low as 6 recently, and now it's sitting at 11. Oh, it's a huge discount now. Great. But that's what's going to happen to Snapchat. I've said it from day one. It's a pile. It's a turd pile. And again, if you're going to choose between Facebook and Instagram, which are both Meta, and spend your budget, where are you going to do it? Where are the eyeballs? Because, like you and I said, only one generation is really on Snap. So the moms are on it just to keep track of their kids, because the only the useful thing for moms is you got to turn on your location so I know where you are all the time, because but you can do that with an Apple phone too. So that's how parents use Snapchat.
Got it. I'm so on.
But yeah, well, your kids missed. Your kids were probably on it, but they were at the late stage of it. But again, if you're going to spend money, where's it going to be? It's not going to be. There's no money in Snapchat in that generation because they don't have any money. They're broke is woke. They love being broke.
Well, you can play the victim card forever. All right, Lee's saying more tequila, less beer. Thank you, Lee. Let's look at a tequila company and a beer company. Why wouldn't we? We haven't looked at Sam in a long time.
Well, let's look at. Let's look at Budweiser first, because it's a good exercise to go through, what's going on there. And this has been a name that we've talked about before. And matter of fact, we said it's probably going to peak up there last summer. Remember when we were doing that little bit with them and our friends there, we told them, sell it. Well, we've been right, and it's making new lows from there, and it's gone from 80 to 53. So we'll see how much independence 10 Barrel has when things start to go a little lower here.
Another interview we gave that never aired. mean, we're strong like that. We trend on people not wanting to hear anything.
So that one's, that one's interesting. The one that still is like, another like name to me that I wanted to bring up and is we've talked about it before, and I can't believe it had the second rally was Avis budget rent-a-car, right? Remember we were talking about this a year ago when this thing was, ratified, and it went to $548 there in the last fall. Look at this thing. But then it even rallied here just in April again. I'm like, what? Talk about manipulation going on in these markets. But anytime this rallies, you need to sell this thing. It's thin, but it's going down. There's no, again, things aren't good in the travel space with the inflation putting the crimp on families traveling. There's not going to be cars rented like they thought. This is not a recoverable time. Matter of fact, this thing needs to go down to $50, $20 even. It's a piece of shit.
I love Matt's his cynical animosity this morning. It's very refreshing. Everything's going to be all right. Well, okay, but what are you doing to?
Well, just think about this. Remember when used cars were all the rage, right? We shot all the way up to 50 in Car Gurus. Look at that. This was just March. Look at this thing now, Bob. $22, and from March to May, took 2 months. That's brutal.
You know what? In hindsight, the used car, we got out of the 2010 Enclave at damn near the high.
Yeah,
the great outs of all time.
And it was just lucky. Good timing. Good.
It was lucky. Yeah. And let me go through that. I was so taken aback at the dealer buying the Winnebago Solus because of the ridiculous offer they made us for the 2010 Enclave.
Right.
A year before, they had offered us $3,000 for the Enclave.
What did they offer you this year?
They gave us $8,500 for it. I was like, when we left, my better half was like, you didn't even argue with them. I'm like, I was dumbfounded. I was on my heels. Like, I couldn't believe that was the offer. You're right. We probably could have got a better deal, but I was not anticipating. How much of life is anticipation? And when you completely don't see, what's again, back to yesterday, you're going from A to B, and something in that journey is so out of your preparedness, you freeze, and you don't know how to digest it, critical think it. I don't know, it's crazy. And it goes to trading too. Like sometimes you see a setup and you're like, how can that be? And you don't pull the trigger on it because you're like, there must be something else going on. And I've missed trades like that before. Be like, what? This can't be here.
Well, here's the problem. Like, what you just brought up is something that I think people struggle with. Again, if you're purely a day trader, you'll pass on trades at the end of the day, even though the setup is perfect. Perfect example of it, kind of just happened on Sunday, when we gapped up again after running up, running up on Friday into the close. I mean, why were we running up? Well, and by the way, that was no small run up from 3,800 to 3,982 yesterday. That's 182 points, Bob. I mean, that's closer to 6% than 5%, when it's right about 5 to 6%. So we went up 5 to 6% in less than 24 hours of trading. Not even. I mean, it was really 4 hours of trading. It was 2 hours at the close on Friday and maybe a couple hours Sunday to get you to the high. Let's say right around the European Open. I mean, you got to sell that. Why are we going up? That's in the thinnest of markets too. So when these rallies happen overnight like this on nothing, you got to sell it. It's dumb. It's purely dumb. And it just continues to work. I mean, how this stuff is not just going to fix itself in a day. Bull markets aren't made in one point. They're not. It's not they continuously have to probe and jam down lows and make them really hurt before they're going to puke. And like we keep talking about, there still has been no pain in this at all. You're seeing retail stocks get hammered. Like that's the latest surge, whether it's, today, Abercrombie.
You talked about that last week. Like if Walmart is suffering,
they're going to hunt them all and they're going to hammer them all. I mean, they're going to hammer all these stocks. So it's just going to continue this way. And look at Google today. Google's a good example. I mean, we keep talking about everything's got to hit COVID lows, but Google's down another 146 points today, 7%, Bob, 7%. I mean, take a look at that.
And so this
is like the discussion I have with people who are so bullish real estate in this town right now. If Google can get cut in half like this, why would real estate be safe? What is so safe about real estate? And matter of fact, if you don't understand the fact that real estate is the biggest illiquid play out there, and it takes time for people to wake up and realize that they're bagged. And we're in that stage right now where they're throwing in ridiculous prices. Nobody's coming to look at them because they don't have any money anymore. I mean, we've lost 20 trillion in wealth in the stock market alone. I mean, that's significant wealth, and that will come to real estate next. And I do contend that we have seen the high in real estate worldwide for our lifetimes.
I don't disagree.
For our lifetimes,
I do not disagree.
And we're just beginning. So if you want a longer term trade that's going to play out, and it's not the story of 2008 and 9. It is nothing like that. So don't even try to compare it, because I'm not saying we have a mortgage issue. That doesn't mean prices can't go lower.
Exactly.
Because and also
it's a whole different set of inputs.
It's a whole different set of inputs, and you got a boomer heavy top end, right? You got a boomer heavy top end who's just lost 20 trillion in wealth. I mean, at some point they're going to be, you know what? We still have a store of wealth in our houses. We're going to sell them. They're all going to sell them at the same time. This is what happens. It's going to be a supply issue.
I mean, are you telling me that the Snapchat generation isn't going to be there with those lofty bids?
I mean, they're woke. They don't have time. They got to understand pronouns and they, thems, and theirs. I mean, they're too busy. They can't make any money.
Warren just said it. The biggest part of the population, the heaviest part, holding the most wealth. And you know what's crazy, Matt? As we have aged, as you and I have aged, and I come from a large family, and I have a brother that's 12 years older than me. So that's, it's almost a generation older.
Yep.
And those 12 years, I mean, they're looking, obviously, as life expectancy, everybody makes that metric, like how many more years do I got left?
Right.
I mean, reasonably, responsibly, like thinking logically.
Yep.
Like, do I want to be holding all this wealth in one giant illiquid asset? And you shared it inside the network yesterday that the average cost for home ownership in I don't know, probably 50 cities in the country, down payment and that mortgage cost, I mean, everything's doubled.
Yep.
Everything's doubled. So you're getting paid you didn't double your salary. What makes you think that people are going to continue to be able to afford these ridiculous prices when the mortgage rates have doubled, the cost of ownership has doubled, the down payment has doubled? Somehow, some way, reality is going to set in a big, big, big time way.
Mm-hmm.
And, back to the Google chart, I mean, just looking at that, Matt, it's just tickling the high of long-term value.
That's right. It's just
I don't know if Pete Stottlemyre is still, gracing the planet, but he would be salivating if that was a bond chart or a wheat chart or something like that. He would be salivating on an entrance to that value range, because over time and again, it proves out that you cover 80% of the value range.
And the low end of value right now gets you back to the COVID low. The COVID low is 1012, and we're at the low end of the value chart on a daily chart is 925. Why wouldn't we trade there?
Say that one more time. I like doing that. Say that one more time, because people are like, no, I can't wait to go back on Benzinga. Maybe they won't even have us on, because the kid laughed at me.
Mm-hmm.
He laughed at me.
Yep. Well, here's the deal. Again, we traded as high as 3064. We're a third off already down here at 2040. Why wouldn't we go the low end of value? And we're, as you said, the top end of value on a daily chart somewhere around 1890. We're not even to the 1890s yet. When we get there, it's just going to accelerate over time. I mean, who's left to buy? All these people, right? This is what people don't understand. All these people are trapped from right now, from February of 21 to today. Everybody is underwater for a year and almost a year and a half. All those people got to get out at some point because they're taking losses. Anybody that bought for the last year and a half now is underwater. There's a gap to be filled here that has yet to be filled. That will be filled. That looks like it's next, 1945 for the gap players. So you got $100, you got $150 coming your way right there. Sell every rally in this thing. Sell every rally up to 23, 2,400. Like it would have, for me, it would have to get above 2,500 for this thing to maybe have a more serious bounce. And 2,500 is 20% from here. That's the thing. Here's what people don't understand. This is a third off from the high, but it takes 50% to get back to that high. Think about that. It's a little different game on the upside now.
Right.
Momentum is not here anymore.
The momentum left the building with Elvis.
Long time ago. It left.
Deep Thoughts by Jack Handy. I saw Pete Davidson.
And I'm getting calls from people again who are like, should I buy Facebook here? I'm like, no. Like you're starting to get that, like, oh, so you must, again, people that don't understand what we do, they think when the market's down, you and I don't do well. And it's the opposite. When there are two ways like this, we love it. We eat it up because you can make money both ways, right? And it's mostly downside right now, just like it was mostly upside on the way up.
Don't be a pig, manage your risk, rinse and repeat. I mean, you want to talk about a target-rich environment between everything, stocks, commodities, and bonds. Let's just go there for a second because you got a scream going there today in the bonds.
Yeah.
142.02 June bonds last. Bring up the bond chart. Again, for me, there's a sneaky feeling that part of the bond buying is people anticipating a bigger whoosh and a need to have a flight to safety, a life raft.
Well, and the 10, interest rates have come off. We're down to like 2.72 after hitting, what were we, 3.1 or so. So just like we said, that will pull back. So yeah, let me bring up the bonds. That's fine. We're making another new high here. And 142.16 was the high just early in the day before, maybe about an hour ago. So yeah, that again, we've been saying this has been bullish for a while. 134 was the low there. 135, I think, was what was it? 134.31, 135. But again, I mean, what are we looking at when you pull back here? You pull back, to a couple months. Yeah, we might run up here to 147. But remember, then you got another section up in here that's ready to sell to you. So this is why this doesn't resolve itself, and this is why, yeah, we could have an equity rally, and we probably will again. They're trying to maybe find a bottom in here. But what is positive out there for equities right now? Earnings aren't going to be good the next few earnings seasons. They're not going to be good at all.
Son of a bitch. I have this whole methodology, Matt, around content for the show. And I don't think I saved it. Hold on, I got to find this because and it was about how much flows on rebalancing are going to come into the market. We talked about.
Oh, I sent that to you. I sent it to you.
And so the thought process is, don't worry. There's going to be a big rally because there's a ton of rebalancing flows coming your way.
There's also a ton of people wanting to sell at the same time. That's what
Matt, I have lost more money thinking, and I'm talking specifically about the Goldman roll in the hog market that I participated with for 5 years. They're like, there's this giant roll coming, but you don't, just what you said, you don't know who on the other side needs the liquidity to get out.
Right.
And so you're anticipating this giant imbalance to the buy side generally.
And if you have an upward bias, which most people do, it's that all of a sudden they put all their cards on that. Oh, I got to be a buyer here, or I'm going to miss it. FOMO is not a good thing because the price isn't telling you that still.
Well, again, back to this carte blanche theory that the rebalancing flows are going to save the quarter.
Mm-hmm.
it's like, okay, but there's also other redemption metrics that are unknown. So yeah, and they were telling you, we know what these flows are going to be. It's 8 billion or whatever it was. You have no idea how many people at the World Economic Forum right now are sitting down in a breakout group saying, hey, there's these flows and you better cover everything that you got coming into the end of the quarter, because you're not going to be able to fuel your private jet if you don't. I don't know. My thought that it's always an if-then conversation, and getting from A to B is very difficult because you don't always know all of the information. In fact, very few times do you have all of that information.
Well, so let's look at the 10-year, because this kind of jives. Again, I think as long as we hold this high down here at 25, I think it's okay. Like it's going to be bullish on a longer time frame. But so yeah, we're selling off 31.67. But again, you start looking at these longer. Remember, we were way the hell down here. And why the inflation doesn't go away unless you have higher interest rates. It just doesn't go away. Econ 101, people. I mean, now it's in play. Now we're like, the Fed is kind of out of bullets. They gotta start raising rates still, and it's not going to be over just because people want. No, the pain isn't great enough. Still, it's not great enough.
Warren pointed out that mostly at the World Economic Forum right now, they're fighting over donuts. There's a large wheat gluten donut fist fight going on, as we only have 10 weeks of wheat left in the world.
But here, take a look at this. I want to pull back even a longer chart here, Bob. This is a 610. I'll go to a daily just so people can see this. We have this trend line, right, that was drawn kind of from the highs. We broke out of it. We did break out of it. And, again, most people probably aren't looking at the longer term nature of these charts like we like to do here. And I would say that, this still portends, as long as we stay above that 25 level, that we're probably going to go higher, right? We kind of a double top here. So maybe people are jumping on that, go, okay, that's it. We're not going any higher, because we went that high in 2018 when Trump was in office. Okay, well, if that goes, Bob, where do we go next? 5, 4.5, 5. We almost, and I think this is what's going to happen. We're going to pull back to 2.5, and then we're going to double to 5.
That would be
doesn't this look like
exactly? You know what I love doing too, man? I love looking at these super liquid, seemingly non-volatile charts that all of a sudden start acting like a commodity. And because once the chart starts to look and act like a commodity, you better be trading it like it's acting like a commodity, because that's what's going on.
Right.
Those are the facts on the ground. Facts on the ground. I mean, I remember, quoting the bonds and being like 2.3 after coming from the currencies, which would rip around, the D-mark would rip around 100-point range. You'd be all over the place with your quoting in the bonds, 2.3. I look at the guy next to me like, you do this all day? 2.3 all day? Three trading, 3 bid, 3.4, 3 offer, 2.3 all day. But like now, all of a sudden the bonds, the 10-year, they're flying around, and you better trade them like a commodity, because that's how they're acting.
Well, I've even seen some things on Twitter, FinTwit lately. Have we put in a multi-year bottom on TLT, which is the ETF version of what we were just talking about. I'm like, really? You want to catch a knife here? Not me.
Again,
seriously,
you want if that is lumber.
For me, the buy here would be somewhere up in here, maybe, but we're not going to be there anytime soon.
Bingo. All right, Matt. Fantastic conversation as usual. I don't know if you're aware of this watching, but the Twitter suppression algos seem to be in full force. So please retweet the broadcast. I should have said that coming on in. Who knows how long anybody could listen to me and you, but if you have, I appreciate it. Please visit us at marketvitals.io. please share, retweet, plagiarize.
I mean, most people like to take a nap, but they also, pick up valuable nuggets that if they want to make money,
we have heard that this is better than Lunesta for sleeping, the Margaret Vitals broadcast.
Mm-hmm.
Put you right to sleep.
Put you right back.
All right. Thank you, Warren. Thank you, Lee. We'll be back again tomorrow for another Margaret Vitals stream. MargaretVitals.io is the community. Come join us. Have a great day, Matt.
You too, Bobby.